Real estate has long been a preferred asset for building wealth, but purchasing property requires substantial upfront capital, maintenance responsibilities, and time. Fortunately, real estate investment trusts, REITs, offer a simpler, more accessible way to invest in real estate without needing millions or even thousands of dollars. In fact, you can start investing in REITs with as little as $100. This guide will explain what REITs are, their benefits, and how you can get started investing in them with minimal capital. What are REITs? REITs are companies that own, operate, or finance income-generating real estate. These properties can include apartment complexes, office buildings, shopping malls, industrial facilities, or even hospitals. REITs pool investors' money to purchase and manage these properties, distributing much of the rental or lease income as dividends to shareholders. By law, REITs are required to distribute at least 90% of their taxable income to shareholders in the form of dividends, making them an attractive option for investors seeking regular income. REITs come in different forms. 1. Equity REITs own and operate income-generating properties. 2. Mortgage REITs, MREITs, focus on financing real estate through mortgages or mortgage-backed securities. 3. Hybrid REITs combine elements of equity and mortgage REITs. Benefits of investing in REITs. 1. Accessibility REITs are traded on major stock exchanges, making them as easy to buy as any stock or ETF. Some platforms allow investments starting as low as $1 through fractional shares. 2. Diversification. Instead of putting all your money into one property, REITs let you invest in a portfolio of properties, spreading risk across different types of real estate. 3. Steady income with REITs required to distribute 90% of their income. Investors can benefit from consistent dividend payments, often higher than typical stock dividends. 4. Liquidity. Unlike physical real estate, which can take months to sell, publicly traded REITs can be bought or sold instantly on the stock market. 5. Professional management. REITs are managed by experts who handle property acquisition, maintenance, and tenant relations, allowing you to reap the benefits of real estate without hands-on involvement. Step 1. Understand your budget and goals. Before investing in REITs, it's crucial to clarify your financial goals and how much you can afford to invest. With $100, you're not going to see massive returns right away, but you can lay the foundation for long-term growth. 1. Short-term goals. If you're seeking regular income, focus on REITs with high dividend yields. 2. Long-term growth. For appreciation over time, look for REITs investing in properties in high-growth markets. Step 2. Choose the right REIT type. There are different REIT types to consider based on your preferences and goals. 1. Publicly traded REIT. These are listed on stock exchanges like the NYSE or NASDAQ, making them accessible through most brokerage accounts. They offer transparency, liquidity, and ease of access. 2. Public non-traded REITs. These aren't listed on stock exchanges but are available through brokers. They may have lower liquidity, but can offer diversification and higher dividend yields. 3. Private REITs accessible to accredited investors. These have higher barriers to entry and less transparency, but can yield significant returns. For beginners with $100, publicly traded REITs are the easiest and most practical option. Step 3. Open a brokerage account. To start investing in REITs, you'll need a brokerage account. Many online platforms cater to small investors, allowing you to start with minimal capital. Some of the best options include 1. Robinhood. No minimum investment, fractional shares, and commission-free trading. 2. Fidelity or Charles Schwab. Low fees and robust research tools for beginners. 3. M1 Finance combines commission-free investing with a focus on building portfolios including REITs. 4. Acorns. Automatically invests your spare change into diversified portfolios, including REITs. Once your account is set up, deposit your $100 and explore REIT options. Step 4. Research REITs. Not all REITs are created equal, so it's essential to research before investing. Focus on the following factors. 1. Dividend yield. Look for REITs with consistent and attractive dividend payouts. High yields may seem appealing, but evaluate the company's financial health to ensure payouts are sustainable. 2. Property focus. Consider the types of properties the REIT invests in. For example, residential REITs perform well in stable housing markets, while industrial REITs benefit from e-commerce growth. 3. Management and reputation: choose REITs with experienced management teams and a strong track record of performance. 4. Performance metrics. Key metrics to review include: 1. Funds from operations, FFO. Measures cash generated by the REIT, offering insight into profitability. 2. Net asset value, NAV. Helps determine if the REIT is overvalued or undervalued. Step 5. Invest in fractional shares if individual REIT shares exceed your $100 budget. Fractional shares allow you to buy a portion of a share. For example, if a REIT stock price is $120, you can invest $100 and own 83% of a share. Many brokerage platforms now offer this feature, democratizing access to high-quality investments. Step 6. Automate and grow. While $100 is a great starting point, building wealth through REITs requires consistent investing. Set up automatic contributions to your brokerage account, even if it's just $10 or $20 per week. Over time, reinvest dividends to take advantage of compounding growth. Some brokers offer a dividend reinvestment plan, DRIP, which automatically reinvests your dividends into additional shares of the REIT. This can accelerate your portfolio growth without requiring additional out-of-pocket contributions. Step 7. Monitor and diversify. Regularly review your REIT investments to ensure they align with your financial goals. As your portfolio grows, consider diversifying by adding different types of REITs or branching into other asset classes like ETFs or individual stocks. In conclusion, start small. Think big. Investing in REITs with just $100 is not only possible but also an excellent way to gain exposure to real estate without the high costs of property ownership. By choosing the right brokerage, researching REITs, and reinvesting dividends, you can build a portfolio that grows over time. While your initial investment may seem small, the habit of consistent investing and taking advantage of compounding dividends can turn your modest beginning into significant long-term wealth. With REITs, you're not just investing in real estate, you're investing in your financial future.